Hi, this is Randy Finney with the right side of the chart, and today is Thursday, March 15th, 2018. I wanted to do a video covering all the trade ideas from time to time. I'll update trade ideas either one by one if there's any technical developments, or I'll do a video, and depending on the number of trade ideas, at times we have a lot of long active trade ideas or a lot of short active trade ideas or both, and I'll cover the long ones in one video, the short in another. Right now, the market's been choppy. The next major trend isn't very clear. I still think the next big move will most likely be to the downside, but when my confidence is high enough, then we'll have more shorts than longs. But as I told you guys many times over, I always try to keep a mix of both longs and shorts on the site. There's always, profits to be made in a bull market on the short side, as well as trade ideas, profitable trade ideas on the long side during a bear market. We can look at different asset classes, gold stocks, commodities, like we've done so far this year, bonds, for example. So, and even individual stocks. If you can pick out the most attractive stocks, especially those that don't have a high correlation with the broad market. And what I mean by that, if the market tanks, Google and Facebook and Amazon and Microsoft, if the Qs drop 30%, I give you my word, they're all going down. Not a one of those stocks will go up if the market were to drop 20, 30%. And I rarely ever make promises in this business, but anyways, that's what'll happen. So we'd have to just then pick out the smaller companies that fly under the radar that aren't components of the index, because that's the problem with all the indexing. There's just been a tremendous, unprecedented trend toward indexing investing. And what that means is when the market rises and everyone's happy and putting money in their 401ks and buying SPY and QQQ and index funds, those index funds turn around and buy what they have to hold, their largest holdings. And that is why those famed stocks, Facebook, Amazon, Apple, Microsoft, and Alphabet, the largest holdings, are almost assured to fall if the market drops 20, 30%, no matter how good their earnings or prospects are. It's called forced selling. Anyways, enough on that. Here's the market. Here's my thoughts before we get into the trade ideas. Let me just reiterate. I put up a static post a minute ago, and I do this because you do have to keep, I don't trade in a vacuum, and I don't think anybody should. It's dangerous. So some of the long trade ideas we have, although there aren't any that have a very high correlation to the market. Right now, I'm looking at XLE is probably the most correlated to the broad market, and um, and therefore what I'm trying to get at here is if the near-term outlook for the market is bearish, or if my assumption that we're going to go down even more before we go up is correct, then it will most likely to provide a headwind to those long trades. So it's up to you whether if you're in some of these long trades already, you want to close them out. There's not other than maybe IEF, there's not any that I would really care to add to at this point now. But let's get into those. And again, that's all. I wanted to start out by just sharing my thoughts, and it's up there in a static post on the front page if you hadn't seen. We're at support right now. This is a very significant level in Qs. Those previous two reaction highs from January and February, and then we gapped above it. That helped to validate that as a important level. So this was a breakout. Now we're back testing that breakout. Any movement down below will have resulted in what we call a failed breakout, aka bull trap, because bulls go and they love to buy new highs, and new highs on face value are bullish, but some new highs fail. And as I often say, fewer things are more bearish in trading or technical analysis than a failed breakout. So if we fall, and I told you my thoughts too, that most breakouts will come back in a little bit. So you don't have to exactly bounce right off 170.88 or 170.90. In other words, that's where we gapped up. That's where those highs were, give or take a few pennies. We can come in and backfill that gap. But if we do much more than backfilling that gap right there, and I'm referring to the March 8th gap at about 169.90-ish, if we do much more than that, then we'll probably go on to hit any of these targets down here. I think we come back down to at least 166.88, and we'll see. We'll see how this thing develops, whether we go down and hit any of these other targets. But so that's what I'm looking at, guys. A little more near-term downside the markets, and I made that clear from early on in this week. Once these trend lines went, put up a post at the end of the day, or at least in the comment section after that market video, that the trend lines were poised. We were closed are poised to close below those trend lines on both SPY and QQQ, and therefore I expected more downside throughout the week, and so far that's been the case. Nothing big, no fireworks yet, but again, that's because this market is backtesting that support. This is a battle. This is a world I love. This is my kind of Super Bowl here. This is a battle between the bulls and the bears to see who if the bulls can defend this level, which they want to buy that backtest, run the market up, and the bears want to see it cave in, have that prove to be a false breakout, and maybe we can get even some more downside coming in the days to week here. So right now, as I said in that post today, I wouldn't do a whole lot if you didn't already short the market on the breakdown there. Just hold off. We're close enough. We're on support now. If that support level gives way, that'll give you a chance to enter there. But I'm not going to put these on as official trades. If I were to short one of the two, and I am short QQQ right now, I just want to clarify, but not SPY. QQQ went up a whole lot more than SPY, so I think it has more to come back. SPY is always, on any given day, SPY tends to move less than QQQ because it is more diversified and has a lot of blue chip, more conservative stocks, utilities, things like that, where this is higher beta, high flying tech stocks. So you want more juice on the downside. Plus the fact SPY has lagged behind on this rally. So SPY wasn't nearly as overbought on this run up is QQQ, which went on to take out more highs. So there it is. That's my preference. I probably spent more time than I intended to on updating the market, but again, this plays into what you can expect with these trade ideas, and let's roll into those real quick, and we'll see. The first one's a good example of getting caught in a trade in sideways trading action. ENDP. This one we bought it way back. Oh gosh, where did we buy this one? Back here, somewhere back here, down off the lows. And this one went on really quick to hit the first target for a nice gain. I can't remember. It might have been double-digit gain. Had a little reaction at that first target level, right, which is this. I believe it's this line right here. I think that was set, the first target set. Then we powered on up after a little consolidation around that first target area and fell just mere pennies shy, literally just less than 10 cents, I think it was, shy of that second target. So in hindsight, I should have set that a little lower. We would have been out of that trade, at least those targeting T2, and maybe recycled back in on a pullback. With that being said, it's just been a sideways grind since. We haven't stopped out yet. I don't see anything in the charts to make me pull this trade early, but that's up to you. This is support right here, 688. You can look at that line, see a lot of reactions. We broke above it, but then we hit a resistance line I had. These lines were probably in this chart the last time I updated weeks back, and you can see this is technical analysis. This is just a stock that's, to me, appears to be grinding out a bottom, um, but I don't see it going anywhere anytime soon. But you never know. Sometimes these things just break out and rip. This may be a little bull flag action. So what you want to look for if you're in this one, see a break above this support level. If we get an impulsive move, something like this, it would be a breakout of the bull flag. Let's go right here and use this tool. There's your little flag pattern. There's your flagpole, and that might thrust us up. Maybe even get us all the way back up here to that second target again. Let that target get hit. And depending on my outlook for the market, I may close out the trade. Sometimes I do that. If I don't stick with a trade to be stubborn. If the technicals clearly tell me to get out early, I'll close the trade early, and we'll just say that's it. We only hit the first target, even though we came within pennies of the second, and that's what'll count as the official gain. Or we get stopped out. But if I'm not liking what I'm seeing in the broad market as well as the healthcare sector, this is a drug manufacturer, I'll pull this trade early, whether we hit that second target or not. And of course, if it hits the stop first, it's out. That's that. Enough on that one. GE. GE still looks to be a potential bottoming play. Nice positive divergence on the daily chart. And I encourage everyone to read the FAQ section. Why I use multiple targets. That's been on there for years. Multiple targets are there because everybody has different trading styles. If you want a quick pop, this has been a choppy, grindy market. So this is very conducive to swing trading. And you had a chance to get in this one. I forget where exactly the entry price was, but we hit the first target in like so many trades recently. Probably the majority of the trades on the site. We've hit the target, first or final target, and then reverse. So there was your chance to get out at T1. Pulled back, but the trade still looks good. I see no reason to close it out. Again, you define your trading style. I put up the video on using OCO orders last night. Especially if you believe that this market has a lot more room to run and it's going to new highs, GE is one of the more attractive bottoming plays in my opinion right now. But again, as I just talked about on the broad market, if this market takes a big leg down, there's an expression, all ships are lifting a rising tide, and the inverse holds true. All ships fall on a sinking or a falling tide. So GE, yeah, it's still, I don't think they booted it out of the Dow yet. It's still a Dow component, an S&P 500 component, but a lot of times if a stock drops too much, they'll boot it out if it gets under a certain market cap and certain criteria, and that wouldn't be good for it. So there it is. There's your targets. I don't know what else to say. It's just we're caught in a grind. You were able to, if you were able to take your profits to T1 and recycle back in, great. But like I said, yeah, it's not a screaming buy to me right here yet. I'm not so crazy about some things on this one. Mainly, we still have the PPO well down in bearish territory down here, and we're not too far above the stop. So let me just leave it there. You guys do what you want with GE. Personally, I have it in long-term accounts. I'm setting it with the, OCO orders. I'm just letting it, if it takes me out, great. And if not, I'm going to hold on to that one uh, with the expectation that we may hit some of the, the final target or at least that second target. IEF, that's a bond fund. I've covered this one yesterday in a static post along with TLT or just the day before. You can see here if you look closely, this is resistance. Looks like a little rounding bottom type pattern here, but pretty much we have to punch above this level, and that line's about 102.65. And if we do, I still like, I made the case for this one quite a bit, strong divergence and all that good stuff. And whether or not we hit these additional targets or I close this trade early depends on a lot of factors. Right now, let's just look at this target. TLT is trading about flat today, so is IEF. But I still think the bonds are a good place to be, especially if you um, would like some asset allocation to smooth out the bumps in your portfolio, because this is sort of, if you will, sort of a hedge on any equity longs. If you are long the stock market and you have funds in the S&P 500 index funds or whatever it is, and the market takes another big dive down, you'll probably see a flight to safety bid, meaning these bonds will prop up quick because these are government bonds. So that one's that. It looks fine. In other words, I don't see anything there, but it does need to take out that resistance. XLE, this one was based off the 60-minute chart. Here's another story, and I'll tell you, I've said it before, I've never in my years of trading seen so many trades either come just within a hair of my price targets, which I've already adjusted down below the resistance level, or just barely clip a stop before going on to play out exactly as I had predicted, just like that last UGAS trade, for example, clipped the stop by a few pennies, went on to hit T2 almost to the dot, which was a final target, and then corrected the other day. So again, the smart folks out there on Wall Street, they know where the stops are. It used to be, I knew that and then would adjust my price targets down below, but I guess they're a step ahead now. Maybe too many people started doing that. So as I told you guys, I may extend my stops a little more beyond my normal 3-to-1 minimum risk return ratio. It's a little bit more liberal stops, and or bring in my price targets a little more below the actual resistance level where I think it's going to reverse that. So that would have been a quick, easy in and out trade. I mean, we hit the first target, we consolidated, but in a perfect world, I would have had my final target T2 set a little below. We would have been out. With that being said, we're probably at break even. No, we're probably profitable. I think we bought this one somewhere down here. We must have. There's a falling wedge at the very least on the breakout of the wedge. So we're either slightly profitable or break even. I'm still longer term or intermediate term bearish on crude. Energy stocks have been in the sideways trading range. I wouldn't give it a lot of rope, guys, if I were you. And I may pull this one up. I may raise the suggested stop soon. If you want to know what I'm thinking, I'd say somewhere along this line here. This seems to be, barring this one little exception, This level here has contained most of the pullback 66.60, and we're not far above it now. So maybe a little bit below that, maybe on a 60-minute closing basis, I wouldn't give XLE too much more room. And if I do decide to raise the official stop or just close this one out early and move on to the next one, I will always do that in an official post on the front page. I never change trade parameters on a trade in hindsight. You're going to get an alert first, a front page post, and then and instead of saying afterwards, oh well, you should have took it out here. All right, let's go to the long trade ideas. Oh, you know what we can do? We can wrap it up here. It's 15 minutes, and I spent a lot of time talking on the index. Then I'll cover the short trade ideas in another video. So, all right, we'll wrap it up here. And if you guys have any questions, as always, on especially on the official trade ideas, if I haven't given you an update in a while, feel free to bump me, drop me a line in the trading room requesting an update. But as of now, this is it. I think all these long trades may face some headwinds here if the markets continue a little lower, like I suspect they will, but my convictions are just not super strong. Otherwise, if they were, you'd see more shorts and you'd probably see some broad market shorts on the market right now. I think it's a time to maybe just keep things light. Okay, this has been Randy Finney with Right Side of the Chart. I hope you have a great